Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is a special edition where our focus is going to be on the earnings. And Syngene International is the company on our radar today. The company has reported a 14.2% increase in the consolidated net profit at 116.5 crores. Remember, the company had posted a consolidated net profit of 102 crores in the year ago period. Also, on the top line front, when we see the consolidated revenues, they've come in at 910 odd crore rupees as compared to 768 crore rupees on a year-on-year basis. The company's managing director and CEO, Jonathan Hunt, now joins in to discuss more insights from the earnings and the outlook going forward as well. Mr. Hunt, welcome to Business Today Television, and thank you so much for taking the time out for this discussion. Let
It's
me
a pleasure.
start by asking you on the factors that have really driven the 18.5% year-on-year growth that you've seen on the revenue front in Q2 and the 22% growth for the first half year. Were there any specific segments, services that contributed significantly?
Yeah, actually quite nicely balanced. The quarter and the half look pretty much the same in terms of the factors that are taking the business forward. By the way, very happy with the performance. I think 18.5%, 19% growth looks pretty good by industry standards, by peer standards, and exactly what we sort of guided for and expected at the beginning of the year. You'll recall our business really, you could look at it in four divisions. You've got the research services, you've got dedicated centers, you've got development services, and then manufacturing. And we're seeing good progress on all of those fronts. I'll come back a little bit to research services, particularly as it pertains to the US biotech sector. But in general, healthy demand across the industry and some pretty good performances. The new bit for us, or at least new over the recent years, has been the side of the business, the CMO bit, so development and manufacturing. We put a lot of capital over the last 3-4 years, a lot of effort into that, and we're now starting to see that contribute quite nicely. It's a bit of a twin engine strategy, and that's what played in the quarter and in the half.
Okay. Could you also tell us how has the Zoetis partnership also aided growth for you this quarter and the outlook going forward?
Yeah, well, that's an important part of it. So Zoetis is a client within our manufacturing business. They're an important one for us. We're making and manufacturing a very innovative monoclonal antibody, a biologic product. It's a first of a kind in its industry. It's a first of a kind, actually, I think, in the Indian environment. And that triggered an FDA inspection some quarters ago. And that now means that we're there manufacturing for the commercial market. It took a little bit of time as we expected to scale up, but we're now running absolutely at full pace and delivering it as we expected to for them.
Okay. Also, I wanted an update on the progress of the acquisition of the multimodal facility from Stelis Biopharma. And could you explain to us the significance that it will hold in your future plans for Syngene?
Super. It links very much to your last question, actually. We've grown pretty strongly in biologics over the last couple of years. We're now getting close to peak capacity, so we want to invest in more expansion space. We had an option to do it internally, or we had an acquisition option, and that's what the Stelis plant will do. It'll get us there a little bit quicker in terms of bringing new capacity online. The deal itself is just progressing. It's at that stage where we're grinding through the closing conditions, and I'd expect that, assuming all goes well, to close in the quarter. And then we'd signaled previously, we'll probably take 6 months at least to put some investment in there, upgrade it, do some automation, get it to the standard that we want. Of course, it started out, Stelis designed that as a vaccines manufacturing plant, and we're going to convert it over to a monoclonal antibody plant. Very similar technology. Needs a few tweaks. I think that'll take us 6 months or so. So really an issue for next financial year is when it should start to come on stream as new capacity.
Okay. I wanted to understand a bit on the guidance front. How does Syngene plan to navigate the temporary slowdown in US biotech funding that you've mentioned as a headwind? And what strategies are in place to maintain the kind of growth that you've already seen in the first half of the fiscal year? You did mention that you'd cut back on your earlier guidance due to this aspect. Now, expect the revenue to grow at mid-teens on the constant currency basis. So, how does one really understand going forward from here? What would that mean on the second half growth on the constant currency basis? And how long would this continue to be a key monitorable for you?
Yeah, no, that's super. Your question had the key element, and I think it's a temporary slowdown in the US biotech as those companies adjust to a new funding environment. You've got leading and lagging indicators to look at. If you look at the rate of new capital going into US biotech, they're already through the dip and it's starting to stabilize. That then will flow through into company formations, them starting to rehire employees, and then those employees start to drive their businesses forward with expenditure. So I think you start to see it stabilizing, and I think a more positive environment maybe as soon as the end of this year, the beginning of the next financial year. So it's a blip, and I think a temporary phenomenon is what I would view at the moment. But if you take a step out, it's in US biotech. It's not in large pharma, large biotech. It's not in Europe and in the rest of the world. It's pretty much in a subsegment. It's an important subsegment. So I think there's indicators, but we're going to have to watch them through this quarter, that it's starting to stabilize. As for the impact on Syngene, a little bit of softening in the growth rate, but we're still talking about some pretty good growth on a full year basis. So on a constant currency basis, we just softened it a little bit from high teens to mid-teens. Mid-teens is still against share strategy, I think, in terms of performance. So we're outgrowing the industry and many of our competitors. So I'm reasonably happy with it. I think in the second half, it'll be a bit V-shaped. Most of that impact will be in the third quarter. And actually, the fourth quarter is looking to be queued up to be quite strong for us. A strong exit to the year. So numbers I'd look for, a little bit slower in the third quarter, bounce back in the fourth quarter, strong exit to the full year.
Okay, understood that. Could you also share more details on the investments in science, technology, and digitization and how they align with your long-term strategic priorities?
Sure. We have a CapEx program for the full year running at about $80 million. We got through about 35 million there or thereabouts in the first half of the year. So there's a little bit more to do in the second half. And it's nicely balanced across the business. In the first half, about 60% of that went into our discovery research services. Some on some technologies. We opened a very sophisticated compound management automated system in our Hyderabad labs. We also bought some land, 18 acres or so of expansion space, which will allow us really to continue to build our campus in Hyderabad. Great place to do science. There's a really good ecosystem in Hyderabad. There's a lot of talent there, and we think that's an important place for us for the long term. We've grown over the last 3 years from a brand new laboratory there to over 1,000 scientists, and that space really gives us runway for the next 5 years plus in terms of expansion. It's more of the same, I think, in the second half.
Okay. Also, in the end, if you could also share some of your plans on the CDMO business going forward.
The same thing, investment in some new capacity. You saw us in the first half invest in a non-GMP development plan that allows us to offer very quick, agile development work that's phase appropriate. So this is the early stage of developing new products before it goes into the commercial scale. I look forward to seeing that part of the business grow.
All right. Well, many thanks, Mr. Hunt, for being with us on the show and sharing all these insights from the quarterly earnings. All the very best to you for the coming quarter, and we shall catch you again very soon.
Thank you.
If you like the video, do like, comment, share, and subscribe.